Good evening, sir.
Good evening, Ramya.
Yeah, so in our previous episode, our results review series right now, which is going on, we have talked about the broad expectations of the market, right?
Correct.
Our point of view of the market. So now it has been 2 weeks since then.
Correct.
Actual numbers are starting to roll up, and we are having more views on the market right now. So before we go into that, let's set up a base context. So people who are coming new for this particular podcast, let's tell them why it is important to know and track these kind of earnings. Why does an investor need to track earnings? Why do they have to know any knowledge about this?
Now, good question, Ramya. Basically, if you see, right, we invest in corporate India, right?
Yeah.
So generally what we track credit growth, we track GDP numbers, the PMI numbers, auto sales.
Yeah.
All this is finally to know how corporates have performed.
Yeah.
Because as an equity as an asset class, right? So definitely result season is one of the very big tool for the equity asset class. If you are an FD investor, this doesn't make sense.
Yeah.
But if you are a market participant, no, you're going to make money out of corporate India. And when corporate India, how they are delivering, what is their commentary, how are they thinking about the future, all these things will become the part and parcel of the result season.
Yeah.
That's why I say, if you are a long-term investor, one of the critical metric is how corporate India is performing. You need to measure.
Yeah.
And you know, as a house, right, as an FPS, we continue to track. And this time we have taken this serious to communicate to you as and when the result season is unfolding.
Exactly. Okay, so we'll go into this main construct. Okay, so now the new numbers have rolled in. What is the picture about the aggregate revenue and growth? How is it looking? Or more specifically, let me ask you, what is the construct of the companies which are in Nifty and beyond Nifty?
Fantastic. So overall, if you see, I think result season have started off well.
Yeah.
I think I was a little more worried before the result season because of the war, oil had spiked, and so commentary could have been very, very bleak.
Yeah.
But very interestingly, if you see the aggregate picture as a preview also, the sales growth has been very, very robust at the broad level, at a Nifty level and beyond Nifty.
Okay.
So to put in perspective, 118 company have declared numbers,
Okay.
20 Nifty, 98 non-Nifty. That's the first number. Within this 118, 6 company only reported loss. So which also reflects bulk of the corporates have actually delivered profit. And if you see which all company, the known names,
Yeah.
HPCL, BPCL, because oil price spiked, they did not pass it on, so you saw a loss.
Yeah.
Indigo had a loss, CET, Network 18, and one more name had a loss. But broadly, most of the corporate which is declared as of now, these are very early days, is in profitable. And if you look at the overall growth, right, overall growth doesn't show the right picture. So if I was looking at the aggregate picture, 16% sales growth, aggregate profit growth is only 4%. Now you can say 4% is not a very good number.
Yeah.
That's why I told the data is little distorted. So we want to see this data removing 4 company. The company number 1 is HPCL, BPCL I told, right? They made loss. Similarly, refinery companies did lot of profits because of this entire supply side issue. So you have Chennai Petroleum and Mangalore Petroleum. When you remove all this picture, right, the aggregate profit growth is close to 20 to 22%.
Okay.
So you are seeing a sales growth of 16, aggregate growth of 22 x for these companies, which is a very good start, I would say, at this point in time.
Okay,
Right.
great. So we have touched upon Nifty 50 in specific, right?
Correct.
So what is going inside that particular construct? Like what are the top 5 performing sectors? What is happening inside Nifty 50 essentially?
Correct. So if you see, the overall growth is very good. But now let's divide this growth into Nifty 50 and beyond Nifty 50, right? That's how we are going to see the data for this season.
Yeah.
Nifty 50, as we predicted, growth is slightly subdued than the broader market.
Okay.
Right? So the sales growth is close to 16-17%. In line with the entire aggregate growth, the Nifty company sales growth is very, very good. But if you see, the profit growth is close to 13%.
Okay.
So you can see, right, from a 22%, we are moving to a 13%.
Yeah.
But still, what you need to understand is, with this result season, the expectation of the market was only 10% with Nifty 50. With 10% expectation, last year we did 6%, we are already tracking 13%. So I would say the start is pretty reasonable, not super exciting, but not super boring. So this is the big construct. Now let's see which all sectors are driving this entire growth, right? So starting from banking. Banking has been a little more mixed. I think in our preview, we thought banking will be more stable with HDFC leading the growth. That was our this one. I think with this data, you asked one question, right? Why we need to track?
Yeah.
When data changes, you change your opinion as a good analyst, right? If you see, surprising factor came from ICICI Bank.
Okay.
They did really, really well, surprised the market.
Okay.
HDFC had a disappointment in NIM margin. The stock actually after the result actually had a little bit of a drop, sharp drop I would say. Kotak was little more muted. Kotak particularly muted on the deposit side, right? So that's something which we saw. Axis also saw some bit of a pressure in terms of the NIM margin.
Okay.
So broadly, SBI is yet to come. So within this 5, you can see the private large banks, one did extremely well, one did okay, 2 did not so okay. So I think that's where the result at this point in time. PSUs, most of the PSUs have done well. So when SBI number comes, it can pull up. So this is banking.
Yeah.
The second important piece is the auto, which is firing in cylinders. The only one number has come, at least within the Nifty 50, is Bajaj Auto, which has grown at 65% profit, right?
Okay.
And if you see, double click and see the results, they have grown extremely well in exports. We have been telling this rupee depreciation is going to create lot more champions, those who are going to export out of India. And clearly that evidence is coming out in auto names from Bajaj Auto. Their EV vehicle production is going up. After a long time, they are also putting capacity. So clearly reflecting auto numbers came little better than what the street is thinking. And that is also getting reflected in the price action. This is number 2. Number 3, FMCG, no big expectation from the big H, HUL and ITC. Numbers are yet to come. But Nestle numbers came pretty well, about 20% growth. So you can see at aggregate, FMCG not expected big. Ex-ITC, ex-HUL, FMCG is also reviving. So with auto and FMCG, one data remains very consistent. Consumption looks like is holding little better than what maybe the street was anticipating. Even internally, FPS estimate was a little more lower. So we need to look little more positive on both auto and consumption.
Okay.
Pharma, as we told in the review also, it's going to be very mixed. So Dr. Reddy and Cipla have already reported very weak set of numbers because of that base effect. So I think if you have to look at broadly all the sectors, the sector which is leading is the auto, FMCG, which is only Nestle has come. Pharma, no big disappointment. Banking is a little more mixed, I would say, at this point in time.
Okay. Compared to the 2 weeks data, banking is said to be more mixed.
Slightly mixed, but I think the price got corrected. So maybe it makes a lot of sense to allocate money with a medium-term outlook. But I think the near-term execution challenge is a little more, I would say, prevalent.
Okay. So let me touch about this particular point. There has been this one perception that's going around the market in Nifty particularly, like large companies are right now not growing as much people has expected them to grow.
Correct.
So what is happening there?
So I think this is really some macro setup.
Okay.
What we are comparing is, one, our Indian nominal GDP growth itself is drifting lower. I've been telling, right? We have been having lower inflation for a very long period in the last decade. What lower inflation means is lower GDP growth at the nominal. And any large company, right, they are very disproportionately get impacted when the economic growth itself from a nominal 13-14% to a 10%. Obviously, you will see a reset happening in the larger names. Second thing, it doesn't mean every large cap is not growing. So I'll give you some interesting name. Eternal is growing at 200%. We know quick commerce is a big rage. Geo Financial Services have grew more than 100%, and I was looking at the numbers. Their NBFC having an explosive growth, very small company from a size of the economy, but it's growing at a very rapid. I told Bajaj Auto, I think very few people will anticipate an auto company growing at a 50-60%. Obviously, these are not one-off in terms of maybe this growth will get tapered down, but still a very, very healthy growth. You can see Indigo growing about 20, Nestle doing close to 20. So it's a pockets of companies are growing faster, but definitely it's a concern is valid. There are pockets of companies are growing at a lower single digit. So as I told in my preview also, lot of IT names are going to grow between 6 to 7% over a long period of time. And IT weights is close to 10%. If you look, Reliance also, right, expected to grow at 10%, weight is 8%. So there is a pocket of Nifty which is very matured, getting disrupted either by quick commerce type of a story or capital market play, and that's what hurting the banks. So some portion is going to grow at a very low rate, some portion is going to grow at a very high rate. So it's more to do with the bottom up rather than saying aggregate.
Okay.
At aggregate, I think we are going to grow between this 12%.
Okay.
But at disaggregate, definitely some names are growing faster.
Okay.
But broadly, they are going to be a little more slower than the past 10 years.
Okay. Okay, now let's move on from like Nifty 50 sector itself. What is happening beyond Nifty 50? Like
Correct.
the mid caps and small cap space is actually having a bit of a momentum compared to before. So what is the picture there? Like what are sectors that are actually driving this particular movement that is happening?
No, it's actually the entire earnings is coming out of beyond Nifty 50, right? That's why we divided this time the entire result universe into 50 and the Nifty 50.
Okay.
And if you see the Nifty next beyond 50 numbers, the PAT growth is 38%.
Okay.
But if you double click and see these numbers, one of the things which is not super exciting is the growth is coming from a deep cyclical sectors.
Okay.
What I mean is banking.
Okay.
As I told, the large private bank did not do well. But surprisingly, lot of PSU banks reported extremely good numbers, which are part of mid cap and small cap. Lot of private banks, the smaller private banks, have done extremely well.
Yeah.
So I was looking at one data today with my analyst. So in the banking, right, one theme is going through is there is no issue with credit growth.
Okay.
Probably some issue in deposit growth, which we know.
Okay.
There is no issue in provision, which is the concern of the asset quality.
Yeah.
The biggest issue in this season is the NIM, basically pressure in the margin. And when you double click and see, very interesting, as I told, ICICI surprised, HDFC disappointed, Kotak marginally, Axis.
Yeah.
So private bank, I would say slightly disappointed in this, which used to be their forte, they are giving away. PSU, surprisingly, there is a mixed.
Okay.
You have seen Indian Bank, Indian Overseas Bank expanded NIM margin. At the same time, Bank of Baroda, Punjab National Bank lost margin.
Okay.
So it's a mixed. SBI is yet to come, as I told.
Yeah.
But the very, very interesting is the slightly lower, which is what your question.
Yeah.
The private small banks or mid-cap banks like Karur Vysya, Federal, DCB yesterday came with, or South Indian Bank. All the four has shown NIM expansion. It means there is a story of NIM expansion, there is a mixed story, and there is a slightly weaker story within the banking. This is where the mid and small cap space is a little more bubbling with profit growth.
Yeah.
But at the same time, what you need to appreciate is these are cyclical industries.
Yeah.
So we need to see how much value you pay,
Yeah.
but definitely growth is getting broad based. And banking is champion. And one of the question is beyond banking, NBFC.
Okay.
Almost all NBFCs have grown between 30 to 40%. So the primary driver of this time, the growth in the beyond 50 is private banks, PSU bank, NBFC, capital market play, metals, all this basically very deep cyclical, and autos. TVS Motor also fired big time. So, but all these are very cyclical. It means profit growth is good. We should enjoy the profit growth. At the same time, we have to be cognizant on valuation. That is why as an house, we are trying to give money only to a flexi assets types where the mandate is a little more open. The fund manager can have ability to choose within the segment.
Exactly.
But definitely at this point in time, growth is far, far robust beyond Nifty 50 than the Nifty 50.
Okay.
Yes.
Okay. So we have touched upon the flourishing sectors that is going on right
Right.
now. What about the sectors that disappointed here?
So I would say it's a very early days. Now, like it's only 118 companies have come with the numbers.
Yeah.
But I'll tell you one sector which clearly disappointed and it shook off the market is the insurance. I would say general insurance.
Yeah.
So Lombard started with the results, and the surprising factor came from combined ratio, which was supposed to be stable and move downward, went to 104. So what is combined ratio is basically you take a premium of 100 rupee, but your claims is 104 rupees, right?
Okay.
So they are actually getting more claims than their premium.
Yeah.
Tremendous pressure primarily from third party motors, and the stock went down.
Okay.
Then followed by Go Digit, very similar story.
Yeah.
107 combined ratio.
Yeah.
So they're taking a premium of 100 and gone to 107. Today I was seeing New India Assurance numbers.
Yeah.
Far, far worse. They are commented saying it's one of the bad quarter. Combined ratio is 122. So for every 100 rupee premium, the loss is at 100, or they're getting a claim of 122. They're saying the inflation of this claim is going very high than the premium, and that is where this pressure. So from an investor point, it was a big disappointment.
Okay.
Both the stocks responded. I'm sure Monday when it opens, this company also should respond in a negative manner.
Okay.
But it has two objectives.
Yeah.
These stocks have not done anything well. They have underperformed for 5-year period. I was just seeing 4-year return in all these companies are close to zero.
Yeah. Yeah.
So the valuations are very, very attractive, but definitely near-term growth triggers are not there.
Okay.
And one interesting data out of this for the consumer, not from an investor, is
Yeah.
brace for the impact. I would expect some premium to go up in the motor. And if you want to renew it, I think you should renew it now, because there is so much pressure, and I think its pressure is going to get reflected in the premium growth, which is needed. Otherwise, these companies cannot survive in the long term, right? So I think this was one sector where valuation is cheap, but really, really big disappointment. But the good news in the disappointment is everybody disappointed. It means not the Lombard, which is the gold standard disappointed. Everybody disappointed. It means it's an industry down cycle and not a company specific who did a bad job. But obviously, right, with this type of a sector is where, as an analyst, right, you need to see where the long term truth lies. What will be a good price to enter? Can you buy through an ETF? So interestingly, my analyst was updating me as part of my weekly process, where a couple of insurance index is just launched. At least the index has been launched, ETF is yet to get launched. So we are finding this entire space will be a little more interesting, where disappointment has happened, prices are attractive. Definitely next near term growth is not there. But in the medium term, general insurance tend to grow between 1.5 times to 2 times of nominal GDP. So between 10% is for nominal GDP, general insurance expected to grow between 15 to 20, and they are the biggest beneficiary of a rate hike cycle, because they make money out of interest income, because they collect premium from us, right? So we clearly see this cycle is going to favor them. But in the near term, as I told, this data has been disappointing, and market rightly punished it for the current concern. Hopefully, once this concern goes away, I see it's a very good sector to track from a medium to long term point of view.
Okay. So far, let's just give our viewers a short summarization of what is actually going on. Just the thought process and whatever, just a short summary.
So very quickly, I think result season started off well. It started off well in the beyond Nifty 50. No big disappointments, no big surprises, except one big negative surprise, which is on the general insurance. So the war on worry was not there big time. People are expecting a little more better year for this. I think in a way, I think we had a good start at this point in time.
Based on our talk, one particular industry and company that I had my eye on was Reliance, because it is a giant company, right, with a lot of segments going on, like retail, geo, whatever it is a big segment. But in the past 4 years, it has not shown that much of a growth. Like, why is that happening?
No, you have hit the nail, Ramya. So I'll tell you a very interesting data I was looking at. Close to 1 lakh crores of mutual fund money is invested into Reliance. And why Reliance is very important, no? It is a 8% weight in Nifty, 4.5% weight in Nifty 500, right? So clearly a bellwether with a 50 lakh investors invested, right? And as you told, 4 years, nothing has happened. So moment the Reliance comes, no, people tell oil and gas, all that stuff. Actually, Reliance is not an oil and gas story at this point in time. It was an oil and gas story maybe 10 years back. Today, I was just looking at one of the institutional sell side, how they have done SOTP. Reliance is a very complex business per se, right? It has a 21 lakh crores balance sheet size, profit pool of close to 1 lakh crore, right? So it's not a company with a very easy to understand. But why did I say it's a consumption story? If you divide the company into 3 parts, the first major part is the retail. You'll be surprised. Reliance first SOTP valuation comes from retail, which is 600 rupees roughly. The next 600 comes from Geo. The balance 600 comes from oil to chemical, oil, new energy, FMCG company, media, and every other initiative. So you understand, the first 2 is consumption, the last one is the all over, right? So this is. So if you look at Geo, right, primarily the penetration of the telecom is done, you know, right? Most of us carry either 1 or 2 SIMs already. So the major growth driver is ARPU. So for the last quarter, they did pretty decent ARPU growth of 3 to 4%. Generally, they are planning for a 5% type of a growth. But I think Jio is a very steady state business, no big surprise like Bharti and Jio. They will not have big addition in the consumer base. The ARPU growth will be growing between 5 to 6 without changing the prices. The moment they change price, the ARPU can be between 7 to 8%. So it's like a steady state 12% growth segment. Now the big disappointment for the result season is the retail. Retail is the biggest wing for them. They have invested so much of energy, money, capacity, but grown at close to 10%. Vis-a-vis DMart grew 15.
Yeah.
I told Eternal is growing at 100% of the times, right? And Titan grew at 40-50.
Yeah.
If Reliance stock has to move, the biggest thing has to move is the retail. I think they have been underperforming for quite some time.
Okay.
They have put so much of capacity and they are still in investing phase.
Yeah.
So anybody wants to take on Reliance, right? The view you need to carry is consumption growth picking up strongly, Reliance executing the consumption story extremely well.
Yeah.
No big disappointment in Jio, and Jio will get listed. So that way, that valuation will get more clear. And emerging bets. So Reliance is all about retail consumption story picking up strongly, then balanced by. But at the end of the day, it's an ROE of a 10% company, right? So expecting anyone for Reliance to really do very well, I think the business model doesn't support.
Okay.
So it's more like a highly liquid anchor stock, maybe makes sense for a lot of institution to own to play the India story with a multi-asset. But I think otherwise it's a very complex story also, right? As I told, every business you have to do a sum of parts and then cumulatively do it.
Yeah.
But it's an industry bellwether. So we continue to track the entire larger ones to form opinion on the portfolio. So you can ask naturally, why do we need to track all these things, right? At FPS, we are very, very clear. We form opinion independently from a first principle point.
Yeah.
By having an opinion, we know that which portfolio is designed to grow between 15 to 20% and no valuation derating. That's how we can allocate money. And I think that's what our primary job, right? Maybe next 30 days is going to be a lot more interesting with bigger names. Probably bigger disappointments also can come in because I think initial set generally good boys will come and the later part is where a lot of surprise can come. But I think we are putting our heart and soul and trying to understand this entire space. But so far so good. So I think we need to take the credit in terms of how corporate India is performing. We are growing. So the message for me to give it to our viewers is, I think corporate India is growing. They're growing at a reasonable rate. As expected, sales growth is very, very good. At aggregate level, profit growth is decent. So I think anyone expecting a moderate return, right? I would say always nominal GDP plus 2-3% over a long time. I think corporate India is extremely well positioned. That's where you should allocate long-term money into India at this point in time. And luckily to end this entire conversation, we are seeing a slightly weakening trade in the AI, right?
Yeah.
So that's a good setup for us. Hopefully we'll continue to track and we'll create a long-term wealth for all the shareholders.
Exactly. So thank you, sir. Thank you for the good breakdown. So we'll get back to this in the next review.
Thanks Ramya.
Thank
Have
you
a nice
so
day.
much. Yeah.
Bye.